So Kirkland Gold just reported Q3 earnings. Before we jump into the Q3 numbers, I just want to take this chance to shout out to all my subscribers and Patreon members for supporting the channel. And if you are new to my channel and enjoy my contents, make sure to like and subscribe. Now let's jump right into KL's Q3 numbers. They reported record free cash flow of $275 million. That's an increase of 22% compared to previous quarter. This is mainly due to higher realized gold price of $19.07 and slightly higher production numbers. Total cash flow from operation is $431 million. Gold production for the quarter is around 339,000 ounces. That's 3% higher than previous quarter and generated revenue of $632 million. All-in sustaining cost is averaged at $886. That's an increase of 18% compared to previous quarter. So we can see that their all-in sustaining cost has increased quite a bit, more than $100 per ounce compared to Q2. Let's break down the operation in more details. Kirkland Gold have three main cornerstone assets: Macassa, Detour, and Fosterville. Both Macassa and Detour is in Ontario, Canada, where Fosterville is located in Victoria, Australia. Let's take a look at Macassa's operation first. Macassa's Q3 production is 38,000 ounces of gold with all-in sustaining cost of $1081. That's an increase of 28.5% compared to previous quarter. This is mainly due to the impact of COVID and excessive heat from the mine, which result in lower grades was mined for the quarter. Macassa's mine accounted for 11% of the total Q3 production for KL. Now let's move to Detour. Detour mine produces about 140,000 ounces of gold with all-in sustaining cost of $1259. That's an increase of 15.5% compared to previous quarter. The increase of operating costs is largely due to ramp up of capital projects and equipment maintenance due to reduced operation in Q2. Also, they are working on multiple projects at Detour, so it's affected the sustaining capital. Detour mine accounted for 41% of total Q3 production and 40% of total free cash flow for this quarter. Now let's focus more on Fosterville. This is the one asset that investors should pay attention to. As you may know that Fosterville is world's highest grade underground mine, and also they are the lowest cost mine. Basically, it's the most profitable mine in the world. However, the reserves in Fosterville is depleting. Current Fosterville's reserves as of December 2019 is 2.1 million ounces. So they really need to find a way to replace Fosterville reserves. They did have some encouraging drill results coming out from Fosterville this year. The company is expected to release a new reserve update at the end of the year. So the question would be how much new reserves will be added to Fosterville and at what grade. Keep in mind that a lot of the value in KL is tied to Fosterville. Fosterville's production number for Q3 is 161,000 ounces of gold with all-in sustaining cost of $349. That's 28% higher compared to Q2. The increase is mainly due to higher operating costs from COVID-related protocols and royalty expense of $52 per ounce, as new royalty was introduced by the Victorian government at the beginning of the year, and lower grade was mined in Q3 compared to previous quarters. You can see that grade for Q3 is about 30 grams per ton, where Q2 and Q1 was around 40 grams per ton. Fosterville accounted for 48% of total gold production in Q3. Now let's look at their balance sheet. They probably have the best balance sheet in the industry as well, which is another reason why Kirkland Gold looks so attractive to investors. Their cash on hand is $848 million. That's 58% increase from previous quarter. The increase of cash position is from free cash flow and two other non-operational cash received. First is the receipt of $108 million from the sales of Osisko mining shares. Second is the receipt of $75 million investment from Newmont to form a strategic alliance for the exploration and development opportunities in Ontario, Canada. And most importantly, the company has no debt. During Q3, $107 million was used to repurchase about 2 million common shares. And year to date, about 14 million shares has been repurchased for about $526 million. So more than $500 million were used for share buybacks. Keep in mind that they are not done yet. Their target is to buy back 20 million shares. They also increased dividend by 50% to about 19 cents per share. At current stock price, the dividend yield is around 1.5%. They also have huge exploration upside from all three mines, Macassa, Detour, and Fosterville. At Macassa, they are working to expand production. At Detour, they need to show that they can reduce operating costs. And at Fosterville, they need to find more high-grade gold and extend mine life. So in conclusion, KL still remains one of the lowest cost producer thanks to Fosterville, and at current gold price environments, they are making massive free cash flow from all three assets, and should only benefiting shareholders by utilizing their strong balance sheet to generate value to shareholders through share buybacks, dividends, and investment into projects. So yeah, that's it for this video. Like and subscribe, and I'll see you guys in the next one.